March 21st, year 2024. This is a presentation for a T2 tax return for a law professional corporation. In fact, it is the same for almost every corporation. There isn't much difference other than issuing common shares. So the professional corporations are restricted to whom they can issue common shares to. So that's the only difference with respect to the professional corporation. There are a few things as well with respect to the professional regulation as well, but that is one of the major issue and concern with the professional corporation. So once you set up the professional corporation, it is no different. Its tax return is no different than a regular corporation. Anyway, so this is the scenario. In previous video, Mr. Raj Ali, he was self-employed under proprietorship. So he decided to structure his business under the professional corporation. Mr. Raj Ali is a lawyer and is concerned with his personal taxes and corporation taxes. Let me go to the PowerPoint so I could show you the scenario slightly better, and I'll get back to the Excel sheet later on. The professional corporation requires a T2 tax return, and the owner of the professional corporation requires to file a T1 for himself. He can receive salary and dividend from the professional corporation. The professional corporation tax return T2 is no different than a regular corporation, except some circumstances. I will not get into those circumstances in this video. So this presentation is integrated with both the T2 tax return and T1 tax return for the professional. So this is the scenario. Mr. Raj Ali is a lawyer. He is concerned with his personal taxes and corporation taxes. He started his business by taking a personal loan, $30,000, and another $30,000 from his savings account. His total investment in this business was $60,000, and he incorporated his business on January 2nd, year 2023. His fiscal year end is December 31st, year 2023. He can choose any day for his fiscal year end. He uses part of his condominium apartment for business use or business purpose. Furthermore, he has part-time employment of $48,000 with ABC Law Professional Corporation, and he incurred medical expenses $8,100 and RSP contribution $30,780 This is his pay stub from the ABC Law Professional Corporation, where he is an employee with a non-related, non-associated corporation. Mr. Rajali decided to incorporate his business rather than a proprietorship. So the professional corporation, from the professional corporation, he is receiving another 48,000. So on this, he is also receiving 4,000 per month, and from his own corporation, he also receives $4,000 as a salary. And this is the remittance for the Raj Ali Law Professional Corporation. You can see here, the reason I show this to you, it shows the employer CPP contribution and employer portion of the EI contribution. The revenue and expenses, the revenue and expenses are exactly the same, except one or two lines highlighted. The highlighted in yellow is an addition that happened because of this corporate structure. So this is the taxable income, and this is the net income before. By the way, here Mr. Raj Ali decided to pay himself 48,000 salary. This number over here, 51,743, includes the CPP and EI, which I showed you over here, the employer portion. And this is the business data for T2. Okay, I'll show that to you in a few minutes. And this is his home office. He could write this off, and he could claim that as a deductible expense. And this is his. There is no capital gains. However, there is no dividend income. The corporation paid dividend, but beware of that. Because the taxable income is generated from the $500 small business deduction limits. Therefore, any dividend paid from this amount would be ineligible dividend. So I decided to prepare the tax return manually so that I know that the software made no error. I wouldn't get into the details of it, how it's prepared. Maybe I could show this to you on the Excel sheet. But beware of that. This is the taxable income over here, $117,561. And this is the general tax rate at 38%. And this is the amount, $44,673. The abatement is 10%. You can see it here. You'd have to disregard this 16,000 number. It's 11,756. It is I used it for something else for comparison purpose. And this is the small business deduction, where the lesser of the least of any of these three amounts. The criteria is the active business income, the taxable income, and the annual business limit, whichever is lesser. So in this case, the taxable income or the active business income is lesser. The reason I showed you earlier, the corporation doesn't have any dividend. It didn't earn any dividends from other company or from public markets or private company. They didn't. So, and there is no interest income either. Okay. So that's why the taxable income is purely the active business income. Okay. And this company is not into manufacturing, so there is no manufacturing deduction. And then the general rate reduction, it doesn't qualify for it. So that's why it's zero. Another video, I'll show you a demonstration with a higher revenue, so you can see the general rate, the refundable tax credit, and this refundable tax credit, this refundable tax credit generates from the aggregated investment income usually. So I'll make sure that we have a, I want to make sure that you have a taxable. To see this, this number has to be this number has to be really high, right? And because to claim that, it has to qualify. So in this case, it doesn't qualify. The Ontario tax rate is 3.2%, and this is calculated based on this taxable income. Okay, this is the taxable income. So the tax payable is, if we sum this up, this column, that gives us $14,342, and the tax paid, right? Usually it's a good idea to pay the tax off. So you pay the tax off, as you can see right here, tax paid, right there. And the company also paid dividend to Raj of $48,000, and the meal, remember, it had $10,000 meal expenses. $5,000 is not claimable, so we had to subtract that. So the retained earnings really, for the cash flow purpose, is $50,219. To be precise, it's $50,218. The opening balance, there was a retained earning $1. So this is something that I'll talk to you about it later. It's a technical issue. So the concerns are employment income, and this from the ABC Law Professional Corporation, and this is from the Rajali Law Professional Corporation. And this is the dividend, and $48,000 subject to dividend gross up. And this gross up takes place based on the dividend paid other than the eligible dividend. So this is an ineligible or non-eligible dividend. The rate for gross up is different. The net income for tax purposes for his personal is what, if you add these three up, plus the gross up amount. The gross up amount arises from the dividend. The personal tax payable is $1,025, and the corporate tax payable is $14,342. The tax paid is total paid is $15,367. Is it possible to get a refund personally from the CRA. This is a legitimate expectation for any taxpayer. In fact, everybody wants to get tax back, the tax refund. If not, they want to reduce their tax liability as less as possible. So Mr. Raj, he needs a plan. He needs a financial plan to reduce his financial risks and business liabilities. Mr. Raj needs a legal plan to protect his business and himself. Raj can further reduce his tax expenses. This is my contact information. So the copyright on this video, any content shown in this video belongs to me. You know my name, Mijanur Rahman. Some of you may not. But anyway, so this is the scenario right here. And I'm going to show you so this is the revenue, and the revenue I chose a line for that is different. You could switch. You could place the line, the code line, based on the description. You could add lines as well, given the situation and scenarios. So this is the revenue from the professional business, professional corporation, and these are the expenses, as you can see. And let me unhide this, so you could see this is $10,000. I already discussed this. The concerns with the red cells, those are alarming cells, could trigger an audit. Okay, and this is the professional expenses. With certainty, I can tell you this where the legal fees is more than, where the legal fees are more than 5,000, you may not be able to expense or claim as a deductible expense the entire amount. You need to amortize that for tax purpose over 5 years. Okay. And also it meets the accounting matching and recognition criteria, because if the legal bill is more than, some cases you might have a legal bill if you have a legal bill for intellectual property and the legal bill is 30,000-40,000, that legal bill is actually an asset if you look at that, because the intellectual property is the purpose. It will serve the benefit for a long period of time. Again, so it goes by case, not every legal fees that you can write off. Some legal fees you won't be able to claim it. So, but the rule of thumb is that if you see $5,000 legal bills, then you might have to claim it over the next 5 years. This is the salary for the employee, and this is the vehicle expenses. Now, these are the vehicle expenses that he had in this self-employment structure. So I kind of broke this down to few cells right here. You can see in 3 cells right there. I'm going to highlight that in red so you can see, or green so you can see now it's in purple. Okay, so this is no different. So the line numbers are over here. The with respect to the CRA line, and so the show these lines on the profile in the software. So the total expenses. So if you subtract this, this is the revenue from the corporation. I'm going to highlight this so you can see this and this. So you could see I'm going to highlight this in perhaps in green. Okay, so you could see that 300,000 subtract the total expenses. If we sum this up, that would give us this number over here. Okay, this is how this number came from, and this is where the number came from. So you subtract 300,000 less the $126,876. That gives you this amount here, $173,124. This is the amount before Mr. Raj paid himself a salary. And the salary here is that he paid himself $48,000 plus the CPP-EI for the employer portion of the contribution times the 12. Now that you took the salary of the amount showing us after the $51,000 deductions, the net income for tax purpose is now it's reduced to $121,381. I also showed you the mortgage, the home office expense as well. He can claim, but he has to make sure that the area is kept segregated, and make sure that he truly meets the criteria of claiming those expenses. The lawyer, the professional, the doctor, whoever the professional is. So the amount here is if we add this up, it gives us this amount over here, $3,820. If I were to be conservative, I would have taken this number over here, but I chose this for now for simplicity, so you could see it on the profile tax preparation software. So once I subtract this, if I subtract this from these two lines, that would give me $117,561. Again, this is the simply multiplication of this taxable income times 38%. That's the general tax rate, 38% for any corporation, and then they get an abatement of 10%. This is more of an abatement. It's like a deductions or credit. And again, we don't have any refundable tax. So because we have the corporation has no aggregated investment income, so there is no refundable tax for this purpose. And then the small business deduction, again, this amount is less than 500,000. The small business deduction is 500,000, and since the taxable income is $117,561, you need to apply 19% on this $117,561 multiplied by 19%. That is the amount he is subject to claim as his small business deduction. Okay, so, and we need the Ontario amount as well. I use these lines I use this line for comparison purpose. So if we simply multiply this amount, the taxable income, $117,561, by this tax rate of 3.2%, you can see it right there. It's 170, this cell. I'm going to highlight the cell so you can see this over there. If we add this up over here, the tax rate, the total tax payable would be $14,342. So the tax paid is he already paid out the tax right before the year finishes. So he has a good accountant, so he estimated that and he paid that off. He also paid dividend to Raj for this amount, $48,000, and you can see that here. And the main expense that I had to add this back because for cash flow purpose was retained in the corporation. This is the actual amount. You would see that if I had shown you the financial statement, you'd see this on the financial statement as a retained earning or earnings. So the tax rates, well, how do I know that you might have a question? Where do I get the tax rates from? So this is the link for it here. If you click on this link, it'll take you to CRA. So this is the CRA site. You can see Ontario is 3.2%. For any amount, lower rate, and for higher rate, it's 11.5%, assuming that's above the 500,000. And this is the Part 1 federal tax. So you could take a look at that. I placed a few notes here. So I would probably claim this amount if I were to prepare someone's taxes. I would probably claim this the home office expense. I would claim $2,268 for this particular scenario instead of the higher amount of $3,820. They both are correct. And this is something that I want to talk to you about because the lawyer, he used the vehicle. The vehicle is actually leased by the corporation. So he he used the vehicle personally. He drove about 10,000 kilometers. Remember in the the previous video for the self-employment, I showed you that the annually he drove 50,000 kilometers, the total, and 40,000 was for the business, and 10,000 was for his personal purpose. Therefore, because it meets the criteria of less than 50%, then he can apply for a reduced standby charge. So this amount, this 2,700, would be a taxable benefit to the lawyer, to Raj. And you can see how it's calculated. It's 27 cents per kilometers times 10,000. And the standby charge is slightly difficult, but I already showed it here. Okay, so let's go to line D30, right there. $9,571, the annual lease payment, or it could do it this way. If the lease payment is $700 a month, I'm going to show you a different one. 700 times 12. This is the annual amount, right? And then you take 2/3 of that. Now, this is not the reduced part. This is the standby. Okay, this is different because I showed you a different amount. If I change this amount to 800, it would be different, right? If I change this amount to $1,000, it would be different. Okay, in our case, it was 9,000. 9,571. So let's show that to you here over here. $9,571 divided by 12. That is $798. So you're going to have 798 multiply by 12, and then multiply by 2/3. Now this is a leased vehicle. If the vehicle was purchased, then we would use this formula over here, highlighted over in green. So you take the 2% of the vehicle, and then you would multiply by the number of months. So if he used it for 6 months, then 6 months. If he uses for 12 months, then it's 12 months, and the value of the car. Okay, so you can see this is the number. Now this is slightly different here because we have a bit of round off issue here. Okay, so but regardless, we are not using this amount. We are going with this lower amount, the least amount, 2,700. So this is 2,700. You'd see that on his personal tax, just about a few minutes. Also, remember, he took out 30,000. He borrowed 30,000 from the bank, and he paid interest. Now, this interest, he can claim it on his personal tax return, right? So I'm going to show that to you on the profile software now. So this is a T2. This is what T2 looks like. So if you go to File, and if you click on it, you'll see a new, and then you click on T2. It is going to ask you for a fiscal year end. I'm not going to click on that, but it's going to show you that. And so this is actually a fictitious corporation. I could put my own corporation, I could put someone else's corporation, but make sure that you take their consent. But anyway, this is a fictitious corporation. I just simply override it and put a review mark, so it allows me to file it, because the software automatically knows all the number. If it is not, I think there is a specific formula for it, I'm not sure, but it recognizes if the corporation is valid or not. Okay, and this is the corporation name, the Raj Ali Law Professional Corporation. You can see right there where my cursor is, right there. And apart from the often, you'd see that sometimes the professionals are self-employment first. They operate their business under proprietorship, and later on they incorporate. So while they're running their business under the proprietorship, they registered their business under a trade name. So in this case, Mr. Raji Ali, he had his Raji Ali Legal Services. So he had this Raji Ali Legal Services. You can see that. And another main thing that I want to point out is that when a corporation switch from proprietorship to professional corporation or corporation, then they might have to choose section. They might have to roll over the business asset. So they would have to choose section 85. I'll show you the form later on. Okay. So the date of incorporation in this case was the January 2nd, and there is no amalgamation, so we don't need to choose anything. We are not, the corporation is not bankrupt, it didn't file for a dissolution, so we don't need to fill out this. We want to make sure that we want to e-file this, so you're going to click on yes, and complete the financial statements. So we would say yes to that. The gross revenue and the assets are shown here, and all the details are. This is actually, I'll show that where this number came from, so you would know. Okay, and then I had them sign the T183. I'll show this to you later on. These are basic formalities. You do need to tick those boxes. If you don't, then you might not be able to file e-file, or your tax return there will be errors and omissions. By the way, a lot of people have this concern, not concern, but they always make mistake. An error is not an omission. An omission and it's not an error. Error and omission. Errors are actually a mistake. Omissions that you've forgotten to do something. They both are error, and generally they're errors, but omissions you forgot. Sometimes some omission may not hold you back filing this return, may not trigger a legal fine, and usually an error cause some problems with tax filings, tax returns. So let's say if I chose, if I forget to click on all those boxes over here, I omitted, and it's no big deal. would be a good idea to have it. But if they don't, then it's fine. But anyway, let's go back to the profile. So this is what the head office information, and this is the signing officer, Mr. Raj Ali. He's a lawyer in this case, and he's also the director and CEO. Make sure that you have all the details of his. And this corporation is actually um, incorporated under the Ontario. They're showing a highlight that something changed as of the May 15, 2021. There is something that we need to address that separately. I'm not going to get into that now. And some of the boxes I left blank for a purpose. Those are not omissions. Now let's look at the what is my next step in this case. So I filled out this info sheet. Now we can go to the business revenue and expense. So you could, for corporation, it is 125, S125, the form number. Okay, you can add as many as you need. You might have 30 different operations under the same professional corporation. Then you could add 30 different forms, right? Or usually maybe 5 or 6, but that's normal. So fill out this, and this information directly came from this Excel sheet from here. Okay, those expenses right there. I could show this to you line by line. Just bear with me for a second. So now you can see this 300,000 came from here. We went to this. I chose as a consulting fee, legal consulting fee. I don't have, actually couldn't, I didn't input a new line. I could have programmed there's a new line over here, but I decided not to. So I used this line over here, what's available here. So this was a consulting fee. So I just put it there. So this is our revenue, total revenue. This shouldn't make any difference. So this is the revenue for 300,000. And then I can go straight to the expense accounts right here. So this 5,000 is over here, you can see. And this is a line number 8. You can see it over here. I'm going to show this over here. Over there and over here, okay? Similar. So I always make sure that I have the line number aligned with the software that I'm using. So this way I don't make mistake. This is the advertising. You simply went to just fill out this information. For data entry, you could hire someone to do that for you. Okay, so the accountant is actually would fill out this Excel sheet. So they prepare the tax return. I usually prepare the tax return on the Excel sheet first. Make sure that I have everything I need. And then I simply start using the profile to fill out the information. This way that I have the information accurate and precise, and make sure that I'm not making any errors, or if so, very minimal. Again, there'd be always disputes with CRA because of the interpretation. Whether it's me, whether it's the another accountant, so there's lawyers, paralegals, because Revenue Canada want to maximize their revenue source, and the taxpayer wants to reduce their tax payments. So there would be always dispute. But as a professional, we want to make sure that we follow law and we follow the rules. We go by the letter of the law. If not, then if it is possible, go by the spirit of the law. But the letter of the law is perfectly fine. What do I mean by that? You don't have to be super ethical. You can just follow the law. But I usually try to be ethical and legal, because if you're not ethical, then the business doesn't survive for a long time. So every business that survived years and years, thousands of years, they're ethical and legal. So now we move to this again. The motor vehicle rental. So I showed the lease. I could reprogram that line as a lease instead of rentals. So this is one I used as an expense, as a lease expense. However, if you own the car, then you would have an asset. You would have to fill out the CCA. And this lease is for 12 months, so I don't have any asset or liabilities on the financial statements. And this is the vehicle expense with respect to the fuels. This is the fuel right there, line 9224 fuel costs right there. You can see it. And the vehicle expense, the maintenance and licensing, and so all together, pulled together. You could put descriptions here, so when you open the file, so you could see. Another expenses, then I use the home office expenses. You could claim that over here, okay? It would be a deductible expense. One thing that I want to show you is that the Raj's salary is, if we add this to, I'm going to highlight these two cells over here. Oops, I'm going to have to change the cell color. How about pitch? Maybe purple? No, not good. We need something. Okay, white. I'll keep it white. Okay, so these two cells over there. If we add these two cells over here, then the reason I showed minus there, because minus plus, so it's 90,000. $90,498. This is what you see right there, okay, on the profile software is that D right here. Salary and wages. Okay, so now we move to the very last resort over here. Excuse me. So this is the total operating expenses right here. I no longer need the Excel sheet, so I'm going to close that off. So I could simply type Control F. So if I look for it, it's right there showing 48,000, and this is the dividend tax credit he received right there, $4,343. This is the tax credit, and I'm not sure if it did gross this up. I'll have to take a look at that. It's supposed to. The software automatically is supposed to gross this up. But I'll take a look at it. If the box 12 was there, I would know right away that it's automatically gets grossed up. The dividend gross up applied right away. And the software may have applied it. If not, then there will be further adjustments to it. So if you see combined, his tax return now is actually he paid a lot lesser taxes. But this is not always the case. Okay, so you have to know, what is your income, how much your income revenue source. This is, you need to know. By the way, this is Mijanur Rahman. Today is March 21st, year 2022, and this is the total taxable amount that the tax he paid, $15,367, integrated with the personal, his T1 and T2. Okay, and my information is on the screen, so you could take a look at it. It's right there. If you need to call me, you could contact me for legal matter and for the tax purpose or investment advice, whatever you need. Please feel free to give me a call, and hope I answered some of your questions. Again, the copyright of this video belongs to me, and thank you very much for viewing.